Yeah, good question. So here, let me just pull these up real quick. So what I would do actually is I've done this. I used to do this a lot more, actually, I realized. Um, Partly I got a little bit lazy, and then, I was also trying to like streamline some pre-market stuff down. Um, but before like even Gexbot was a thing, and I was just using my just these local Python scripts to pull like Gex OI data. Um, I would just pull this either in pre-markets or yeah, usually in the morning.
Yeah.
And then what I would do is I would so at this time, I had to manually do the conversion, right?
Mhm.
So these are giving me the NDX Gex by OI profile. And I would also check, of course, the SPX Gex by OI profile.
Mhm.
Um, what I would do is just mark the pretty much just the highest peaks, the points, the largest levels, whether it's by uh, only calls or only puts or the net, right, between calls and puts. And I would just use these as static levels that would mark onto my chart after converting it to ES levels. And there's not really anything more to it other than literally just going to like this peak, that peak. Okay, there's like a peak here at 7,500, right? Nice big round number. So I find the conversion to ES, which I don't recall what it is right now, but I would then mark that onto my ES chart, right? And then same for NDX. So the NDX, like I said before, because it's so illiquid, the levels are much more obvious and like they're a lot easier to mark. They're a lot easier to kind of suss out whether I want to lean on this level or not versus SPX where there's quite a few
Yeah,
more
there's a lot more.
levels going on.
So how do
But
you
that's sort of
convert it?
changed now. Sorry, just one more thing. This changed now just because we have the Gex by OI updating
Mhm.
automatically. So I just fall in that typically now. Yeah.
Nice. So how do you convert it into ES levels?
Oh, it's very, very simple. So I know this is a common question that we get. I just get actually this is a really opportune time to explain it. So the conversion is really so theoretically, it's factoring a number of things. There's a reason that there's a premium between the E-mini versus SPX, like carry costs, which are also determined by like how long is left on the expiration of the futures contract. So this is not necessarily important for the calculation, but it's just I think it helps keep that in mind for why it is that the premium is changing today. Um, and the fact that there will be variance in that premium. But typically, what I do is just before we had the intraday model, I just grab the spot price of SPX, then I grab the spot price of ES. I align them by timestamp. So in the pre-market, because the index price is not updating yet, I just use the prior day close, right? Or I was using the prior day close. So I just get spot price of ES at the prior day close, specifically at 4 p.m. Eastern, right? Because futures don't close at the same time. Subtract the SPX spot price from that. And then that was just a number that I would input into my script to do the conversion.
Oh,
Um,
that's pretty.
Now that it's very simple, yeah. It's also
So,
because
so let me explain to you what I just heard. So you take the
mm,
price from the previous day before at 4 p.m. and you
mm,
subtract whatever you're getting from the spot price at the
yeah,
XBX day, and then you'll get
yes,
your ES level.
yeah, exactly. The important thing is just to align the timestamps, right? It's SPX spot price at some time versus the E-mini spot price at some time in order
Okay.
to ensure that you're right. Now, of course, that doesn't factor in the overnight drift. There's stuff going on overnight, not just because the futures market is open, but also because the premium is changing because time is still passing even when the cash market is closed.
Mhm.
Um, there's also limitations to this, right? So that was something I would input as a static level pre-market. And then while the market is open, time is passing, that premium is also changing. It's fluctuating because, the futures contract is slowly approaching expiration, among other things. So there's like risk-free rate that doesn't really change in today, but that is technically a factor as well. But now, we just update it automatically intraday, and we don't have to do anything finally for that. So
Yes, I love that you can see that in the futures. I've been trying to find whatever I can use it for, like trade and view. Remember we discussed last time it's
yes.
futures, but it's not an option to be honest. And whatever is already in there as an indicator is really doesn't do justice to Gexbot. So it would be nice, but I don't think there is anything out there for us.
Uh, I'm glad you brought that up. I forgot. We actually did look around. We are planning on. We have a, or we've had a TradingView overlay script.
Okay.
We're just gonna open source it. So we're gonna release that, and then people can use it, and then they can iterate on it and modify it as they want
Oh,
to.
to you.
Um, so it'll actually be officially supported, but it'll also be open source, so people can,
So
because
everyone,
yeah, everyone can help improve it,
that's amazing.
um, or personalize it. Yeah,
Yes.
because it's still a little not janky, but yeah,
Well, I'm sure it's going to be helpful and we need it because I find this will be
yes,
so much
I know.
easier because you have everything already in your chart. You don't have to go back and forth and add it on and off, which is really,
Yeah,
I appreciate that.
yes,
Thank you.
yeah.
So what else are we going to discuss? Hi, Daniel.
Hi,
Oh, hello.
We got somebody
hi,
else.
yes.
We did. Awesome.
So I think that's great. What else can we kind of point here in the
Oh, so
search?
we were still talking about research, I think.
Mhm.
So I was just using this for static levels. No, I also think that one of the biggest, right? So, like for my personal use case, I am plotting these to trade futures, and then all of my pre-market prep is generally centered around the index. But I think really the biggest expansion in terms of use case for research is that you can query this information for any ticker, right? So this is not limited to the index or even SP 500. This is quite literally the full universe of optional tickers um, that you can do research on. So if you are trying to trade, okay, well, this is not totally. I think typically I think of unknown tickers, but the only one that comes to mind is GEV, which is related to like semis and stuff like that, which is not an unknown sector to trade. But for example, right, if you want to look at those levels, because you're trading, if you're swing trading options for them, all the same ideas apply, although it's a little bit less time constraints, I guess is the word, right? So like if I'm looking at GEV, um, and I want to swing contracts, let's say into the end of the year, or even just take monthlies, right? Then I can also do something quite similar to how I was doing for NDX slash SPX, where I'm
Mhm.
looking for, where is everyone located in terms of the Gex profile, right? So everyone here is at LM50, there's that node, then there's 1200. Spot price is right at that call wall
Yeah.
currently.
Mhm.
Um, was it July 1st?
Yes.
Okay, so a big chunk of that expires actually tomorrow. Right. So how to read this? This rainbow is telling you what expiration that bar occupies, right? And then because the dark red is associated with July 2nd,
Mhm.
then this is where the red bar ends, meaning this amount of uh, that Gex profile at that strike is expiring tomorrow. So maybe I don't want to get long yet because there's just all this positioning that's going to unload tomorrow. But I'll probably wait until after.
To get in again, yeah, to go into a long.
Yeah. or maybe Monday. It's hard with these ones, especially like Micron is another classic example. This is kind of devolving into maybe not what I want to talk about, but it's just been stuff I've been looking at. Micron is another one of those. It's squeezing. Oh, this looks a little bit better.
Mm-hmm.
Right. So like, okay, there's a level at 1K. This expires, or most of that expires also on July 2nd, which is tomorrow. So maybe after that expires, I'll see where we land, where spot price is. Then maybe I'll try to sell a put, maybe one leg down, right?
Yeah.
So over at like 950, and then look for some sort of calls along up here, right? This also is a lot more flexible, I would say. It's because there's a bit more. Okay, so like futures is very simple, right? Because I'm just scalping these levels. I don't really care about time so much, not just because there's no theta on the futures contracts, but also because it's intraday. There's just a lot less factors to consider, right? Whereas this, like, okay, yes, I have these levels. I need to keep in mind the expirations. Another way to look at this is the term. Let me see if I did that correctly. Yeah. So I can also see by term structure what that positioning is in terms of, and this is all the July 2nd. That's all the stuff that's everyone's like front loaded on these because they're squeezing.
Mm-hmm.
So a lot of positions will be clustered at the top. So it's a little bit hard to hop in because you'll find like they'll dump like 5% and then everyone crowds in, they're spike 9%, and there's a lot of
So a
obviously a
lot
lot
of
of
them
vol
are
going on here.
expiring tomorrow, July 2nd. What would you do at that point? Would you just wait it out and then get in back into a short, or wait it out and get back into a long? But
I'd be trying to get
for
along.
options is a bit different because we have the
Yeah.
time, and the time that really when it fluctuates, it kind of kills the contract. So would you normally buy it for like long terms instead of buying it for today, buy it for a week or a month or 2 months? That'd be more accurate.
I think like if I'm being genuinely honest, I am probably not going to enter a position here just because of um I think the boat has sort of sailed with these.
Yeah.
I mean, so here's the term structure view. Then you can see sort of along time the IV of various moneyness like the 50 delta, call put, 25 delta, et cetera, et cetera. And quite literally the entire term structure is almost entirely above 90%. It's pretty inflated
Yeah.
IV, right? So there's considerations for
For a
because it's
correction.
not necessarily that like it's not necessarily a bad thing to lift very high IV names.
Mhm.
Um, it's just that there's a lot of mental and emotional bandwidth
Mhm.
these kinds of high vol positions. I was previously long Micron earlier this year, but I did not hold on to those positions. If I had held on to them, and they were like 3 6 month contracts too, I would be holding through this, but I can't get in with the IV this
Mhm.
inflated, right? Because there's other you have to take into account like broad market too. I mean, there's a lot of things to consider here. SPX, this is not totally accurate because the front is going to be inflated just because of so maybe I want to ignore the 0DT for SPX just to get a slightly easier to look at view. So I chose start DTE of 2 just to look at next week's term structure for SPX, and it looks a little bit more normal. So there's like you can check like the broad market term structure, right? So you ideally want that to be in line where vols across the board are cheap. Then you're looking into your individual name, probably not Micron because it's not cheap at all, and looking for opportunities that in that sense. Sorry, I don't know if I'm rambling or if that's all
No, no,
making
no,
any sense to you
I
there.
understand. It is making sense.
GV, maybe the IV is not as inflated, so there's opportunities here possibly. I'm also going to filter out like the near term, which is also tomorrow, and look at that. But yeah, so this is like the general, I guess, workflow. Oh wow, it is 17th.
So what are you seeing there? Can you explain that to me?
Yeah, so here I'm seeing on the 10th. So there's I wonder if this is earnings, but basically this part of the term structure, it doesn't normally look like this, right? Normally, the normal look is it's higher at the front month and then it gradually trails off just due to, or the other way around, sorry. But there's this giant kink here, which makes me think there might be earnings at this date. Um, but like in terms of a trade, you could think of, okay, well, these vols are low, so I'm going to look to, and my overall bias for GEV is bullish because of the semi sector relationship. Um, it's one of the bottleneck tickers, right? So I might want to buy a call on this expiry for July 17th, and then short a call over here. So it's a calendar spread, right? So
That's
if I'm long
really
vol
good.
here and I'm short vol here, I'm trying to look for this spread to normalize and flatten out. That's really the idea behind that.
That's
Now,
really
that's still NFA because I don't know why this kink is here. I would have to verify what's. I'm sure it's earnings, so I might not necessarily want to be long this, but maybe I can be long the front month
Mhm.
and then see how we move on.
Yeah, because that goes all the way to September 18th, so it's quite a long.
Yeah, yeah. July 17th. Okay. Anyway, yeah.
So
So I think that's basically.
so in the in the part of the research where it says weekly, monthly, and quarterly, do you use that
Oh
for
yeah.
anything in a specific?
Uh, I no, I don't. I don't.
Mhm.
I think there are. I'm trying to think of a specific use case, but I think in general, at least for retail, it's just not super. I would rather not have a filter on that.
Yeah.
I can't quite think of a use case where I only want to look at quarterlies. I mean, maybe if like I'm trying to figure out some JPM collar roll nonsense, then I might just filter for quarterly. But that's also not really a, that's purely just trading index
I think
contracts.
Daniel has a question. He says, do you basically
Oh yeah.
use research to look into institutional long strikes position in order to position yourself within 3-month expiration contracts?
Yeah, I don't know if I would classify them as institutional necessarily, right? So like we are like if we're looking at this is the impact net of everybody interacting with the term structure, whether they're institutional, retail, or whatever. But it's just in aggregate, right? And that's really what matters. Um, in terms of the 3 month, yes, generally that's also kind of dependent on, right? Like if I'm trying to lift the July 17th contracts, that's like a 2 week. That's fairly near term for generally what I like to be positioned in.
Mhm.
But if there's a reason to do it, then uh, I would. I mean, it also depends on the ticker. It depends on what I'm trying to do. Generally, I do prefer at least a month further out, but that's more because at least for me, using options is not really it's not a day trading thing. It's not intraday. It's not really a short time frame, right? It's more like, if there's something very specific that I want to trade, generally those are going to take like 6 to 12 months to materialize. Like at least for me for options trading. Because all my intraday stuff is, I mean, these are just daily stuff, right? Intraday versus further out. So
How about if we are going into XPX and we want to buy for like 2 months kind of thing, like a period of longer? How would you look it up to make that decision?
um,
So right here.
I would be looking at this. There's some. Oh wait, hold on. We should make this more obvious. This really should be a default, to be honest. There's a parameter. I don't think it's actually clearly denoted, called series equals deltas, where instead of trying to plot it by moneyness, it's just plotting by deltas, right? So you can actually see the skew, right? So we're doing the 30 delta call, 50 delta, and the 5 delta, and then same for the puts. And you can see how the darker green is the lower delta call, the brighter red is the lower delta put, the OTMs, right? And then as you get lighter, you get to the center, which are the at the monies. Then you can see the skew, right? So like the OTM puts for SPX are always going to be lifted versus the calls. That is like I think the word normal has a little bit of baggage to it, but I would call it a normal regime, right? Now, if this were flipped, where call skew, and by call skew, I'm referring to OTM or 30 delta calls, if those are for some reason lifted, right? So like if you think about wait, actually I have a better one. Okay. Try to explain this a little bit. Okay, right here. So like these are the OTM puts, these are OTM calls. Generally, there's always this slope, right? That's literally what they mean by skew. It's a skew distribution because the math, Black-Scholes by itself would imply that like this should actually be flat, but it's not because people are generally buying puts for protection, so they're generally priced higher than they are calls. That's what causes the quote unquote skew in the distribution, right? Now, if that were inverted, think about rotating that chart sort of towards you 90 degrees, right? So we're looking at a cross section here. If you're seeing all these call vols lifted even higher than the puts, I mean, this is very rare. Or if they're closer to the at the monies higher, that's when I would start looking at. Well, there's a lot of downstream things to look at after that, but that would be something that would imply, okay, maybe there's a not bear market. I also hate using that term, but it's abnormal. It's abnormal to the point where it is worth looking for hedges,
Can you please,
3 to 6 month hedges.
sorry to interrupt. Can you please
Yeah.
show me SPY as well, if you don't mind?
Oh yeah. Here's should be very similar.
Mhm.
Okay, I see that people don't usually use our term structure charts. Hopefully we can change that because I think that they're
That's what we're trying to do today.
that's what we're
So
trying to do. Yeah. Interesting. So because it's an ETF like SPY, it is different. There's the difference is it's related to how I was mentioning earlier where like I like to use the index stuff for OI or higher time views, but then the dynamic profiles I will use SPY slash QQQ. In a similar vein, the term structure is going to look quite a bit more active.
yeah, I see.
Yeah. I think this is still normal. I mean, you can see that this is a normal view of skew still. This might be related to the weekend vol pricing. No, I think this is normal. Let me check QQQ. Yeah, it's basically normal.
A bit higher as
July
well.
6th. Yeah, it also lifted.
Mm-hmm.
Those are just the zero GTs because everyone's piling into them. I mean, this is something that has, I think, yeah, I know that zero GT volume has been increasing to an absurd amount.
So I have a question. What do you see here that it's going to give you that decision to get into a put or a call? What are you looking at exactly?
I mean, for this, there's not really anything that applies anything weird. If there's abnormal, there's always kinks in the skew. You can't really, like, a kink would be, okay, so we see this gradual slope and then it comes down here on July 13th and it continues. It's also depressed right here. So that you can call it a kink in the skew. But that doesn't necessarily imply that, okay, well, if these vols are depressed, then I should, buy these vols expecting it to lift up. There's probably some structural reason behind that, causing that. So what you'll find is you might buy that OTM put, let's say it's hedged, right? And then as we're coming to expiry, it becomes the roll and it begins to normalize the kink out. But because time is passing, like your nets change and the extrinsic or the value of the contract is basically zero, because there's some exogenous reason. So that in itself is not enough. I think for broad,
So I have
for a
one question. So what is your
Mhm.
big window? What is the function of it?
Oh, this just tells you when the VIX expiry is occurring.
Okay.
This might not be accurate because there's still some things that are need working out. I'm pretty sure it is accurate. July 24th, yeah. But that's all that's telling you, that there's like vol expiration essentially in VIX.
Okay.
Um, but no, so like broader strokes, right? It's still, at least for QQQ, it's the same idea where if I'm seeing call skew lifted up quite a bit, at least relative to the at the monies, um, I don't think it's likely that they'll ever get lifted to the same degree as the OTM puts, which are these ones. That would be, uh, I don't want to say like eventful, but it would be pretty extreme for that to occur. But if they're lifting over the at the monies right in the middle, then maybe I'll be looking for short or bearish opportunities. And that's more specific to index or even like SPY QQ ETFs. That's not necessarily the case for individual tickers,
Like Tesla,
um,
for example?
like Tesla. That's a great example. Let's see what they look like. Okay, they're doing something over here.
What are
July
they?
2nd.
Interesting.
What is that? That's an OTM put. It's the 5 delta put. So someone's lifted that. So, if you were reckless and you saw this and you're like, okay, well, the IV over here is really lifted, so I'm going to sell the 5 delta put for tomorrow. That is like, uh, what do I say, first order thinking of viewing this.
Mhm.
But really, it's like, okay, well, if I see this, then I'm going to start looking into what exactly is occurring tomorrow. And maybe I do want to sell that vol. Or this is some sort of data issue. That might be the case. I'd also double check that.
Yeah.
Um, but what's another one? Like Micron.
Well,
Huh. Oh, okay. So you see how, because it's squeezing or semis are squeezing, sorry, not semis, but what's it called? Data storage, battery, tickers. It's not NVIDIA, AMD. It's everything downstream of them, right? Or upstream of them. See this call delta. This is the 5 delta call.
Mm-hmm.
It is so lifted relative to the at the monies.
Mm-hmm.
For tomorrow, I mean, all throughout the entire term structure, that 5 delta call is lifted versus the at the money, which is down here. And then, of course, the puts are squeezing as
So,
well.
so what is the meaning of that exactly? The call is lifted.
Well, so this is where knowing the context is very important, right? So if we if semis were not going through this squeeze, right? If there was not some structural reason, I mean, there always is, right? Like
Mhm.
you would never see this for no reason. If there was somehow no reason, then you could just sell the call, right? Because you're saying, well, the call is clearly very overpriced. It requires a degree of realized variance or volatility to materialize or to monetize, right? Um, and so I'll sell it because I think that these people are overpaying for it, right? That's like the first order reading of that. Um, the other reading is, well, I know that Micron is getting squeezed. I'm looking at the put skew. I'm seeing the 5 delta put like absolutely. I mean, the thing is with bubbles, you can't. Ideally, you're trading options, right?
Yeah.
Ideally, or I should say that there's a lot of second order effects of the volatility in a bubble
Mhm.
that you can trade against or with that you cannot do with shares, right? So in this case, I am seeing this put skew so elevated that ideally I would just sell puts, right? So it's a pretty classic example, I think, where there's an asset that's squeezing, the vols are lifted all across the board. You don't want to get long because the calls are too expensive, right? Because you need an absurd move for them to monetize. You
Yeah.
don't want to short it because you're going to get run over. So the best thing to do is actually just sell puts because even either it continues to squeeze and because you're long delta, even though you're short Vega, um, you are winning on that part of the trade or the position uh, if it goes up, right? And then if it collapses, if the bubble pops, then even though you're still short delta, you are primarily, even though you're long delta, you are primarily short Vega. So when that bubble pops, the vol crushes. Your short Vega portion of that position is winning out, even if the stock price, because the stock price would have to fall to absurd levels for the buyers of these puts to be able to monetize their position, right?
Yeah.
So you just sell the put. You sell the put so that you can have exposure to the bubble as it's going, and then you're not too exposed to downside if it pops.
So if you're in already in a position, just sell your puts if you have them. Don't get in long and don't get in short. Pretty much that's what it is.
Yeah, yeah, yeah. NFA, but I mean, it's not a. Even now, was it July 1st?
Yes.
It's not a. It's not the worst idea to do that. Of course, this isn't telling me anything because everyone's all front loaded, unfortunately. Yeah.
Beautiful. What else in here would you normally use to help you get into a put or a call? Or I know we can talk a little bit about Bana and Charm and the meaning of it, or how
Mm,
can it be used if it's something you want people to use. Um,
yeah. Let me think of. I should have prepared for this. Hmm.
let's wing it.
Right. Of course. Oh, interesting. Did we? Okay, yes, we are using the same convention, I believe. So that looks like earnings, July
Mhm.
17th. I mean, that's what it's implying. Let me
Let me double check
double
too.
check that elsewhere.
I was
I'm
gonna
actually very curious now. Other than like OPEX, maybe it's just, I think it was just OPEX, actually. Yeah.
July 17 is the primary market event for Micron Technology. Nasdaq MU is the monthly option expiration.
Yeah, it's just a broadly OPEX. And then because Micron is, one of the main ones uh, affecting the broad market. So of course everyone was also positioned in there, even though Micron does not have. But yeah,
So
anyway,
what is
so
the meaning
how do
of
we
that?
read this?
It's gonna be a day of puts. Is it gonna be a day of calls? Is the market gonna go down because of this? Because I know MU has a lot of pull on the entire market because the other day was the earnings and it moved everything really.
Mm-hmm. Um, Hold on, I'm adding the extra filters just to see. Okay. Interesting. And then the other one would be puts. So what I'm doing is I'm decomposing. Um, so this view is just the term view, which is netting out calls and puts Vanna. And then this view has the calls. So it only has the call Vanna exposure in there. And the last one is puts, so it only has the put Vanna exposure. So it really is just telling me everyone's piled into puts for
So
that.
July
Uh,
17 get into puts pretty much.
well, no, so it's everyone is positioned in puts. Um, I mean, like, okay, I'm kind of almost afraid to say it, but like, the thinking really is that if Micron doesn't sell off hard enough,
Mhm.
these puts will crush, right? And then it's just gonna squeeze further, basically. So all those puts, when they expire, the opposing short hedges for them um, are going to get dumped, which causes positive delta flow at time of news, of information, right? Of the OPEX, um, the uncertainty collapsing is what will cause that. Let me check against the skew again with that in mind. Okay, I keep forgetting. Yeah. Oh my God. Okay. So I'm looking at this and let me do this actually. It's a little easier. Um, so we know that like it's primarily the Vanna of the position is all put side for July 17th. We also know that if we're just looking at the term structure, yes, the call vols are lifted on July 17th relative to the at the monies, which is quote unquote abnormal, but for this is not too abnormal. But regardless, the put skew is so lifted all across the board. And on the July 17th, it's also very, I mean, like,
Mhm. So they definitely have
selling
to,
puts on that day is not the worst idea.
yeah, so definitely that day they're gonna have to get rid of some of them for sure.
Yeah, unless Micron or somebody comes out with something materially changing what the market is aware of. But my personal, I guess you would say, bias is that there's quite a bit more to go. Although I also see that Micron might be a little bit crowded, right? So like GV is one of those names that are related to the sector, but are not. It's not as commonly known. Although I probably shouldn't. Well, yeah, it's not as commonly known, so it might be easier to get positions on in GEV to get the second order downstream effects of like Micron squeezing, right? Let me look at of course, they're also in here. Oh, the skew is a little bit different. Interesting. What are we doing here? Okay. Oh, it must be literally just because of today. I'm guessing it's up some like 4%, something ridiculous.
Is it? Let me see.
Let me see. Nope, it's down. Oh, 3%. But it's at that prior high. Oh, right. But so actually let me filter out that front or front DTE. So the vols of her, that is very interesting. So you can either sell puts on Micron on that July 17th with all those in mind, right? The term structure, the skew, the Van exposure of that positioning that's sitting there waiting, hoping for OPEX to cause, this bubble to pop. So you could take the other side of that. Or you could also go, wow, this is really verging on like NFA. I don't think this is really the what I should be talking about on this call in general. This is an educational thing. But anyway, yeah. So like less crowded in GEV. So there might be thinking of going long in there to get exposure to the
So
Micron
you
full
think
push.
Vana is very useful to check more details on your puts and calls? Is that what you're saying with this one?
Yeah, it's a combination of. So if I'm looking at the term structure, we are really just looking at latest, I'll just call it prices or values of the contracts along, the strike or money axis or the time axis. And then if we're looking at Vanna, we're looking at existing positions that are currently open, right? So
Oh,
this is not latest price, but rather this is the aggregation of currently open contracts and then measuring, the Vanna of those positions at each
that's good to know.
expiry. Yeah. So it's the combination of the two. So if I'm thinking in terms of vol crush, it's really the Vanna side, or if I'm thinking about, I guess I would say the bias, not really regime, but definitely more bias, like bullish bearish. And then if I'm thinking about uh, whether it's expensive or cheap, or how to transact with contracts or options, such that I'm getting a good deal, in order to then make a trade based off of my bias, right? Because the term structure is telling you, okay, are the calls cheap, puts cheap? Therefore, do I want to short the call to be bearish, or do I want to long the put to be bearish? Do I want to play it across the calendar? The term structure is telling you how you might want to express your trade. It's not the term structure itself that is telling you what trade to put on, if that makes sense. I think that actually answers your prior question a little bit better,
Good.
right?
Good. So I have another question. How would you use the gamma in here? You just show me how to use the Vana. How would you use the gamma with options in?
Oh, that's a good question. So, that's all up of a longer. So, I'm thinking 1 second. So originally, okay, so Gexbot itself was made not because like it's specifically looking at gamma for the original intended purpose of Gexbot, which has always been to scalp futures and not anything else. And scalp futures on a very, very near term, short time frame, right? So, because everything we're looking at is always 0 DTE. Like, yes, there's 90D aggregated, but the gamma is highest for the near term contracts because I only care about what's happening now, right? So all my trades are no more than 15, 30 minutes, an hour, whatever it is, close at EOD. Um, Now, if I'm looking further out, then it's not really gamma that I'm looking at, right? So I mean, you're either looking at Vega because Vega is similar to gamma in the sense of it's telling you how the deltas are changing, um, given a change in IV. All that means is just that it's slightly different if you're looking at longer, at least a month out, 2 months out, how you're measuring those positions.
Yeah.
You're going to be using Vega. In this case, I'm using Vanna just for the events or ER reason. And then I'm also just using the term structure as a proxy for Vega because I don't really need to know I can just look at the vols to know what the Vega is really, because that is what it effectively is for further out in time contracts. I'm sure there's going to be people who are very pedantic and like saying that I'm kind of not saying things totally accurately, but that is, I think, reasonable statements to make, given that there's quite a bit more to those statements. Right. So to answer your question, it's more that the gamma is just for short-term stuff. And then if I'm looking at like the swing trading for options, then I'm not so much looking at that. It's really more of the term structure then.
Okay. So what would you use for swing trading?
Well, it would be, like I said, it's just a combination of either there's some sort of either OPEX, or if there's earnings, or if there's FOMC, but that's a little bit different now than it was maybe 3 or 4 years ago with respect to that, or CPI, right? I guess, yeah, CPI or inflation is another one of those. Anyway, so there are news events or events that are expected in time. Then I'm using the Vanna view to look at those to see what the the collapse in expectations when that news comes out might result in terms of bias, and then it's just term structure. It's just this. It's just the vols.
So I
And that
have
would
one
be it for
more
swing
question.
trading.
We discussed in state about Vanna as well. You use it kind of
Mhm.
similar from here, just with the news as well?
Yeah,
Okay.
right.
Can
So that would be more intraday.
can you explain that
Uh,
for us?
well, it's just a lot more compressed, right? So if I'm looking at, I think key thing to note here is that this profile is only looking at the 0 DTEs. So if I'm looking at the Vanna, I mean, it's kind of interesting today because it's so well balanced, right? There's just all this positive Vanna, this negative Vanna, so we're just kind of ranging for the day. But it's really only because it's constrained to the 0 DTE or the 1 DTE. It's only really useful the day of the event, right? So if it's really particularly like the Fed, or consumer, like Michigan consumer print. Those are the few times that it sort of aligns where, okay, I do want to know the Vanna of these positions, and then I'm also actually trading the intraday. But I think in general, the swing trading view is a bit better suited for looking at Vanna because there's so much of the you can see further out in time
Yes.
with this view. Yeah.
It's a lot more clear. That even gives you the dates and everything, which is much better.
Yeah, it's cleaner because yes, you might have the Vanna view if you're trying to intraday trade the vol crush, but you have a lot of other factors to manage already,
Mhm.
that it becomes a bit of information overload, and it's a bit more useful to just look at the gamma profiles at most, even if it's like a Vol Crush day or a Fed day, sorry.
Perfect. What else can we discuss about this? So we already, I think we talked about the last video about the strike start DTE and you never
Yeah.
talked about those.
Oh, they're just filters. So the default, let me see. Actually, they're just filters where, okay, well, the default for if I'm looking at the profile. Oh my God, I'm on the wrong account. Hold on.
It's okay.
I am on a different, this is the correct account, actually. Okay, this is my personal account. So if I'm looking at SPX profile default, I recall that it's either 50 strikes. I believe it's 50 strikes. It's just filtering the strikes such that it goes from spot price and then it gives you a total of 50 strikes. So 25 above spot price, 25 below spot price. And then if you want to filter that because you want a more narrow view, then you can change that. But I almost never do that because I personally prefer seeing everything. Start DT and DT is a little bit different. This is a little bit more useful, especially if you're looking at term structure. That's just it's an inclusive filter of the first DTE or the first expiration in terms of days expiration that you want to include in your data, and then the end DTE. But this technically can go out to quite a bit.
Mhm.
I don't know if we support that actually. That might be something that we do kind of constrain because, okay, maybe not. Yeah, it does. It does. So if you set the NDT to 300, you're basically looking 300 days out. So you're including stuff from next year. But I mean, it gets a little. I don't think it's necessary for most people to do that. We feel the standard default limits are reasonable,
Yeah.
unless you're like, yeah, basically. Yeah. Any other questions?
Yeah. So I think Daniel uses a lot.
Mhm.
Let's see. Usually he checks in the morning. I don't know if you want to explain it yourself, Daniel, where you log in the morning and research and you get the information that is already been printed there. Not sure how.
Hi. Yes. So basically, when the marker start,
Mhm.
I wait 15 minutes and then I go to
Mhm.
research and look into the, strikes position. Basically, the put
Mhm.
wall and the call wall,
Mhm.
and just expecting the reversion. Once
Mhm.
the price comes close to the strike, I'm just expecting the pullback.
Yes.
Um,
Yes.
sometimes works, sometimes doesn't. Um,
Mhm.
so I'm a little confused, honestly, because um, there were a couple times where the price was falling and it didn't pull back in the put wall. It
Mm.
just pulled back close to the strikes um, in the upper level. I don't know if you can understand what I'm trying to explain. Um, so, so
Uh, are you saying it's like it's coming close to the strike and then it's reverting beforehand, or are you saying that it's
yes,
also
yes, yes, exactly.
no, we've actually gotten this question before. So are you just for more clarity, you're looking at I'm guessing SPX?
ESPX. Yeah,
Oh,
SPX open interest.
and then are you trading ES or are you doing
No,
SPX
no, just
contracts?
options.
Just options. Oh,
Yes.
um, no, it's a good question. So let me see if I can try to visualize this in a way that,
No, because
hmm,
I was so happy because there was a week where the price exactly had a reversion in
mhm,
the close to the put wall, and after that, the next week it didn't work, and I was like,
yeah,
oh, what's going on? How can I understand whether the price will have a reversion close to the put wall, and
right.
we're not,
Mhm.
Yeah, no, I think it's a good question. So part of it has to do with time of day. Um, Mainly if you think of, so whenever I'm seeing this profile, I'm always thinking in terms of if you sort of draw a line that is uh, going over the tops of these bars, right? So like if you draw a
Mhm.
very, very loose line that has this curve and then it flips over here and then it goes over the puts down here. So if it's very early in the day, think of drawing that curve in a very loose manner, right? So like you're going over here and then it's kind of gradual and we flip over here, right? Then if you're thinking over time, so if we get to the afternoon, or if the more extreme example is if we're going into EOD, so like the last 30 minutes, then you want to imagine drawing the curve very, very tightly to each of the bars. They get much, much sharper, right? So I'm not doing a general curve. I'm actually going very, very, very close into the bars. Um, so the reason I bring that up is because the nature of the measurements is that the gamma is very it's a lot more rounded, I should say, before expiration or early in the day, right? So if I'm looking for reversions against some node, um, or some major, right? Then I'm thinking in a much broader stroke. So I'm thinking like 5, 10 points maybe, um, versus if it's close to expiration, then we get to much much more pinpoint interactions with the levels. Then it's like, okay, well, on SPX, I may be seeing like reversions within 1 or 2 points, or maybe half a point, or maybe to the tick, right? But basically,
Oh,
if
okay.
it's in the morning, it's a lot smoother, that curve. So you kind of want to be uh, pay more attention, even if we're a little bit further away. You want to give it a little bit more room. Um, and then as time crosses, then it becomes much much more yeah, local. Does that make sense?
Yes, yes, yes.
Yes. Okay.
Totally sense.
Okay. Yeah. Um,
Thank you.
I mean, yeah, yeah, of course. I think it's funny because it's like, we already think of zero DTE as being near term expiry, because before all this craze about options, right? Most people are in options way further out in time, right? A month out, 3 month out. So they would think of like a 7 week, or sorry, 7 day, or a zero DT as being extremely close to expiration. But like, I mean, I think the nature that has changed, right? So now we're thinking in terms of time of day way more than we would in the past, because there's just been so much more volume in the zero DT
Mhm.
complex. Mm.
Yes, I think makes sense for scalping, as you mentioned before. Like,
Oh yeah.
you
Mhm.
pay attention on the strike, and you trade a few ticks, right? Like 5, 10 ticks in future. But
Yeah.
but for option is different.
It's
We
hard. It's
I
so much
mean,
harder. Yeah.
most of us are looking for the 100% profit from
Yeah.
our investment. So we need more,
Larger return.
yes, more movement, like
Um,
more ticks, sorry, so
yeah, I mean, I think in that same vein, right? So even for scalping, well, okay, there's some nuance here, but I like the first 30 minutes because they're way more volatile usually. But
mhm.
then the last 30 minutes are also similarly volatile, but I think it would be different for you guys. And I think I talked with this about this with Diana, where the last 30 minutes, the options are so close to expiry that they're very, very cheap. So the relative return is much
Yeah,
higher,
Yes.
right? And at the same
yeah,
point, the points of reversion are much sharper. So you can do stuff. I mean, you could probably even be trading spreads into EOD just because
yeah.
it's pure
I
gamma.
was, yeah, exactly. I mean, I
Hmm.
was talking about this with Diana because I
Hmm.
mean, I'm testing to trade the last 10 minutes of SPX
Oh, that's
because
10 minutes. Yeah,
yeah, it's too crazy, it's too crazy.
it's a lot.
$30
Yeah, I can't do that.
contract can cost at the end like 2,000. Is
Yeah,
insane.
yeah, yeah.
So for example, if you want to trade the last 5 10 minutes, I mean,
Whoa.
what would you do? I mean, with Jass,
To keep
uh, uh,
your to keep your
yeah,
contract.
like you said,
I would not. I think there's a happy medium. I think that doing the last 30 minutes is ideal for this. I don't think, especially if you're doing this manually, I don't think that trading options the last 10 minutes is really feasible. It's kind of feasible in
Mhm.
futures only because, for me to get in and out is so much simpler than it is to manage an option contract. But I would say that just sticking to the last 30 minutes instead of the last 10 minutes would be more ideal in terms of being able to manage that position. And also, the vol is so cheap relative to the rest
Mhm.
of the day. Right.
Yeah.
Gotcha.
That's what I would say. Yeah.
Thank you.
Yeah.
So
Um,
if you like, we can go back to research and go a little bit more over anything
sure.
else that we haven't done.
I think we covered
I think so
about
too.
everything I can think of.
So the watch list, when you add something to your watch list, what it does is whatever. How does the watch list work?
Yeah, so we actually want to flesh this out a bit more because there's a lot we can do here. But so overview of watch list is we have a set of predetermined tickers. If you choose that ticker and you just have it open, it will every 15 minutes update you with various metrics for that ticker. So these metrics include Gex profile, the skew or the smile, I should say, um, zero DTE, either nets or absolutes, which just means it's combining um, the calls and puts without netting them out, a delta hedging chart, right? And then this just updates through the day. And it's basically an automated way versus, if you're in your chat and you want all these charts, you would have to manually input these
Mhm.
commands to get them out, right? So these are just the most popular charts that we started with. And these are the ones that we lifted because originally this was purely the Discord bot. And then we had since lifted that entire pipeline onto the website. But we do plan to, for example, let you set custom filters. So you choose what charts you want to update with, and then eventually, choose whatever ticker that you want to have update for you.
That will be
Um,
very, very nice. So down here, I
yeah.
see you have a day, like a calendar where you can pick your day and your time. So you can just go back and forth whatever day, I guess, that you choose to.
Yes, you're actually supposed to be able to view historical data here. I think we have restricted this, or we should have restricted this only to watch lists. But here we can see data from June 17th,
Yeah.
watch list data. This you can use for review, yeah.
Yes.
But it is restricted to these charts.
Beautiful. So where can we find the tickers? I'm not for myself, but for other people to know where they can find their commands, where they can use to find whatever information they're looking for.
Oh, that's a good question. Okay, that's the wrong. So okay, right. So if we go to resources, then GBR docs, this has the explanations for all of the commands. So there's the visual explanation. If you go up here and you click technical, then it tells you all of the possible commands, what it is that they do for every single one of our metrics.
Beautiful.
And so this is where you would want to do that. And then in terms of the tickers provided, I wasn't kidding. It quite literally has access to every single ticker in the market. So there is not really a list. It's just if you've got a ticker, then I do understand that. I think the natural progression from there is ideally people have some sort of scanner, right? So they'll choose some metrics. And because we do have universe access, right, we're doing some sort of scanning. We may do that in the future, but that's not in the cards currently, at least.
So what are you guys are working at the moment to improve Gexbot? What are you guys doing right now?
We're about to release our historical data access. People have been asking about this for a while, and we finally put it together where people can not just via the web app access our historical data, but all can also download bundled zip folders or flat file access to all of the history that we have. So that's our current primary sprints. And then we have some other things in the pipeline regarding SKU, but that is still under tight wraps in terms of what I can talk about. I think
That's okay.
that's all I can say. Yeah.
I'm sure it's gonna get better and better. And then you
Mhm.
also were saying that you're looking to do an indicator for trade and view, which we can use in options.
Yes. Yes. Thank you for bringing. That is something that we want to. It is already. I had forgotten that I had made that a while ago. It's already functional. The plan is literally just to open source it so people can both use it or iterate on it. Um, yeah, I know that that's something that people have asked for a while ago, for a long time.
Yeah,
I mean, I personally use TradingView as well.
yeah,
It just never, even the solution that we have is not quite up to par with what I would prefer in terms of integration because it is not the same as our MotiveWave or NinjaTrader integrations. But I think it is a fine enough compromise for people who just want something to work with.
absolutely.
Yeah.
Well,
Yeah.
I think we covered pretty much everything from research. Anything
Mm-hmm.
else that you have in mind or anything else that you can think of? It would be good.
Uh, well, one other note, I think I had mentioned it already, is that we are starting. We have implemented the synthetic futures endpoint, right? The conversions for the original two, conversions for SPY QQQ. But we do plan on expanding this. I mean, a lot of this was contingent on our vendor even having futures data in the first place.
Mhm.
But they released it. So there's a lot more in that department that we want to provide in the near future. So yeah, but that's it.
Okay. And then next time we'll just focus on order flow or something, something else.
Sure,
But
of course.
this was
Of course,
amazing.
man.
And thank you for your time. And I really appreciate you taking your time to show us all of this, and looking forward to doing many more of these videos.
Yes. Thank you, Diana, for having me on.
You're very
Thank you,
welcome.
Daniel, also for the
Hey,
questions.